I'm looking forward to now using the chance to speak to you to pick apart what everyone said on European real estate debt markets so far. To maybe before we go into the details, Dan, you joined Tristan to set up the real estate debt platform. Coming from a long background of real estate debt in Europe, certainly very curious. Maybe high level first to get your view on the product evolution, the industry evolution, where it's come from, let's say, the last 10, 15 years, really, where this asset class has been set up and developing.
Yeah, I mean, it's in Europe, it's pretty much a post-GFC kind of product. Yeah. And it kind of reflecting everything that everybody said here, but in a narrative form. Post-GFC, it started really in the UK. In some smaller European markets where there were banking crises. So you just kind of follow where somebody had a serious banking crisis, and that's where the little pockets opened up for alternative lenders. The UK had it sort of very significantly changed its regulatory environment very quickly post-GFC, so you saw a big opportunity open up. Ireland, for a while, it's small market, but some interesting opportunities. Netherlands, similar kind of story. And it started as mainly a mezzanine product. So the first funds that were set up, when I was at LaSalle, the first kind of strategies that focused on kind of that high single digits to double digit sort of return space were focused on mezzanine. And then I think what's happened over time is the regulatory environment's pushed the rest of Europe to kind of have to open up, push the banks back. And at the same time, the product's gotten a little bit more sophisticated. So we're borrowing some of the technologies that you see in the US. You can make a whole loan, you can put loan on that, replicate the kind of returns you might get from a mezzanine. And maybe there are some advantages to doing it that way than going directly into the mezzanine space. So we're seeing the product evolve, and we're also seeing the geographies evolve. So Europe has slowly opened up. Probably Germany's been the last one where you've seen really significant flow for alternative lenders. But this big increase in inflation, interest rates, sort of blowing up, has now really kind of, I think, cracked the nut, if you will, for the German market, in addition to some of the other European markets.
Let's go into geographies in a second, and also touch upon fragmentation. But I think what you touched upon, product evolution, kind of that mezz, initial start, segueing more to the whole loan opportunities, maybe also market driven. But I think most interestingly, I find that your comment about the adoption of the mechanism.